morning. We want to thank you for the gift of our lives. We want to thank you for everything that you have given us up to this day. And whatever we deliberate today, may we carry it on such that we can be able to act and make sure that what we have planned can be able to be effective to our nation. Amen. Thank you very much, our dear guests. On behalf of the CEO, Uganda Institute of Banking and Financial Services, Madam Goretti, allow me to welcome you to this dialogue. This morning, or today, we are going to have a launch of our Financial Services Awareness Month, and all the details are going to come as this morning transgresses. Allow me to welcome our board chair, Dr. Lois. Thank you very much for gracing this occasion. Our ED for Uganda Bankers Association, Mr. Wilbrod, you're most welcome. Thank you for being with us. Our dear board members present, we are happy and always happy to have you. Our platinum sponsors, Bank of Africa, led by our ED, we are humbled. Thank you very much. Our keynote speaker, Mr. Joseph Lutwama from FSDU. Thank you for being here with us. We shall be waiting to hear from you. Senior management of financial services, institutions present, our dear participants, and all savers or potential savers present. You're most welcome and thank you. A dialogue about money is something that you cannot turn your ear off. You always have to keep coming for those talks about money. Because as we are here, we all don't have enough money, but we keep on talking about money, money, money. Because if we had enough money, we would be sleeping at our homes. Okay? But here is an opportunity for us to get to know how far we can go with the money that we already have, especially that COVID-19 disrupted every plan that we had. And our questions were, how long can our savings take us if the country is locked out? So without wasting any much time, allow me to welcome our CEO, Madam Goretti, to welcome you and tell you why we are here officially. A round of applause for her.
Thank you very much, Lambert. I know that I'm tall, but I think I might find this useful. Good morning, ladies and gentlemen. It's an exciting day, isn't it? Especially if you start a day talking about money, really. The day should end with money. And I hope, Lambert, you're promising that. So, our board chair and guest of honor today, Dr. Louis Kasekende, and all the board members in the room, industry captain heads in the room, especially our very dear sponsors, our platinum sponsors, our gold sponsors, our bronze sponsors, and you've all sent really big representatives. We thank you very much for being here with us in the room. The CEO of the UBA, Bankers Association, you're here with us and always with us. The media, the listeners online, we have people online. And the public. Of course, not leaving out my fellow staff at the Institute. I wish you a very good morning. And I warmly welcome you to the launch of the Banking and Financial Services Awareness Month and Financial Literacy Campaign. Lambert has said something about money, something about COVID, something about crisis. There is no better time than now to become financially resilient. it's very interesting, as you'll get to know later, that resilience is not only for those that have, or resilience is not only for those that don't have. We have been surprised, almost caught unawares, this year, 2020. We know that when we started out, in fact, I said it wrongly, 2020. That was it. It was supposed to be a double year. It was supposed to be blessings. It was supposed to be excitement. But what a rude shock. In the first quarter, 2020 became something else. Now, in this period, many have fallen, many have died, but many have risen in a manner that is surprising. And that is what this month is really about. The mandate of the Institute is to promote professionalism and inclusion among financial service providers and users. And today, we are focusing on the piece of inclusion. As an institute, we are supposed to do this through market-led training, research and consultancy, and we've done quite well on the professional side. The inclusion piece has been a bit of a jinx. Today we are glad to be here to attempt and to start a journey in that direction. We all know that matters of finance are very important, and as such we value the work of the different service providers and sector players. This month is supposed to celebrate that, the work you do, but also get to the public to understand and appreciate what you're doing. We know what has been happening in the market as regards the same. We hope that this month will help to create appreciation. With those very few words, I want to once again thank you for putting away time and finding it relevant to come and be here with us, online and physically in the room, but to also especially thank you for putting up the resources. These are your resources. The resources to enable us to carry out this month. I know that we are going to continue thanking you for an entire month. But please take back our gratitude to the boards, to the management, and to the staff for doing this for the public. I thank you.
Okay, thank you very much. Another round of applause for our CEO. Okay, very quickly, allow me now to welcome our keynote speaker, someone who is very keen about these financial inclusion matters, and that is none other than the Director of Programs for Financial Sector Deepening Uganda, Mr. Joseph Lutwama. You're most welcome, sir.
Good morning, everyone. I hope they'll put up the slides. Like the moderator this morning has introduced me, my name is Joseph Lutwama. I work with the financial sector deepening Uganda as a director of programs. A little bit about FSD Uganda. I know some of us know, but probably there are many out there who are watching us who may not know FSD Uganda. We are a non-profit whose mandate is focused on making financial markets work for the poor. Currently, we are funded by the UK government, but also by the Bill and Melinda Gates Foundation. We are part of a network across the continent in 8 countries, whose major focus is on making sure that a lot of people on the continent are able to access, but also efficiently utilize financial services. So this morning, I'm here to talk about the state of financial management within Uganda and what the statistics say. One of the things that we do is we do a lot of research on the state of financial inclusion. I know most of us are aware of FinScope, which is our flagship research. We do across the continent. And some of the statistics I'll be sharing this morning is basically an analysis of that is coming from that research. But before I talk about financial inclusion, over the years, there's something that we've noticed and observed in our work of trying to extend the financial inclusion frontier, not only in Uganda, but also on the continent. We've noticed that many times we'd encourage, facilitate, support you players in the market to get people to open up bank accounts. But they open up bank accounts, and a few months down the road, those bank accounts are on zero balance, and most of them, for the greater part of the year, they are dormant. Would support and encourage insurance companies to be able to extend insurance services to the bottom of the pyramid, but people would come and sign up for the first policy, and for the subsequent months, they don't renew their policies. So we started wondering, what is the problem? Yet initially we were working on the hypothesis that if we can get people to access financial services, if we can get people to open up bank account and let them save that little money they save every day, maybe the magic will happen and they will get more money and poverty will be something of the past. But like some of you know, over the last 6 or 7 years, we've seen increase in access to financial services, like you will see in the slides. But the poverty levels have also increased. In other words, things are moving in a different direction. I want to leave us with a food for thought. I know we are talking about money, your money can. But I think there's a bigger discussion, and even within FSD Network and within FSD Uganda, we began pondering on that discussion, that we need to get money in people's pockets before we think about getting them into a bank, before we think about getting them into an insurance company. Financial services exist to serve those who have money. That's why they are called financial services. They don't exist to serve those who don't have money. That's why when you go to the bank to borrow, the banker will first assess your financial situation. They want to be sure that you have cash flows, that you're earning. If you're not earning, I'm sure there's no banker here who can give their money to anyone who's not earning. If you walk into an insurance company and you're taking out an insurance, whatever it is, they're insuring something, isn't it? They're insuring assets. If you don't have an asset, I don't need an insurance. I don't need insurance if I don't have an asset. If I don't have a car, if I don't have a house, there's nothing to insure against. If I don't have a business, there's nothing to insure against. So you can really do all the marketing you can to that person, but they will not understand your language because they'll ask you, you're asking me, what am I going to insure against? So that's a challenge. So within the FSD network and within FSD Uganda, we're beginning to think differently. That financial services are not an end in itself. Financial services are actually an enabler. How can we leverage financial services to increase economic activity that will translate into more employment, more jobs, and more income. If we begin to look at financial services in that light, then as people grow in their incomes, as people grow in employment, they will begin to see the value of why they need to keep their money. Because if I'm earning, we have 19 million Ugandans working age. Potentially, those are Ugandans who are the capacity to earn. Out of those 19, 2 million are unemployed. 15 million are self-employed. And most of those 15 million self-employed, 80% of those are in agriculture. And what agriculture am I talking about? Subsistence agriculture. I grow food not because I want to earn from it. I grow food because I need to sustain my family. And whatever left, I can sell. But that's just a by the way. So I don't need to save. If there's anything I'm going to save, is to ensure that when my son falls sick, I'm able to take them to the hospital. Not because I'm going to have a sunshine, sunny night retirement. No. If I'm running a business, I'm not running a business because I want to become the biggest exporter of milk in East Africa. I'm running a business because I need to educate my children. We call that entrepreneurship by necessity. Such a guy does not need a bank loan. Why? He's not looking at expansion. Cash flows is not in his DNA. So long as I can earn enough money to put food on that family table, enough money to take my children to school, that is it. That's why most times investors, private equity investors come to this country, they're looking for businesses to invest in, and they struggle finding businesses. Because businesses are not looking for a lot of money, because they don't have grandiose expansion plans. They're not like the young guys in Texas or wherever who wake up in the morning and they want to take over the whole world, and they come up with a business plan of $1 billion. And when you look at their plan, they can actually pull it off. 5 years down the road, they're actually hitting the stock market with $1 billion. Our young people here are looking for money for employment to sustain themselves. They don't have those big things. Now, it's very difficult for you to have a thriving financial market, a financial system in an environment like that, because you're trying to sell something people don't need. So we need to get our people from thinking subsistently to begin to think commercially. On average, a household in Uganda has 3 to 4 acres of land. Of course, most of that is in rural areas, but a bigger part of our country is in rural areas. Think about 3 to 4 acres. Most of our homes are on a quarter an acre. If you're lucky, they are 10 by 50 decimals. And that's a big piece of land in Kampala. But multiply that by 16 or 17. Look at the size of such an amount of land. But a guy wakes up in the morning, throws his seeds, whatever grows, they eat, they are merry, and they're okay. It is healthy food. They won't fall sick because it's organic. So they won't need to go to hospital unless a crisis like COVID hits, or something like that hits, So at the end of the day, the guy can live for a whole year on less than 10K, 10,000 shillings, and you're okay. And you come to him and tell him, please, you're going to borrow money, you're going to do that. So you need to transform that person and say, you have 3 or 4 acres, why can't we take 3 acres and transform it into a commercial unit, get into a cooperative, become big, and all of a sudden, a person who was living on 10K, and they never saw anything beyond 10K in their 3, 4 acres, now they're beginning to see 100 million out of 3, their 4 acres, and if we get 10 or 4 families, or 20 families, all of a sudden you have transformed that economy from just 50,000 or 100,000 into an economy of $1 billion, 10 billion, 20 billion, 100 billion. Now, those are guys who are going to come running to your bank because there's no way they're going to keep this money. They'll have put up assets and they'll run to the insurance companies because they cannot afford to lose their assets. So that is the paradigm shift that we need to be able to have. And you'll see from the statistics that because we don't have money, there's not even to manage money because there's nothing to manage. Just a moment. So there's nothing even to manage, eh? But also we can see that just a moment. Okay. Anyway, for the greater part of the slides, I cannot see them here clearly, but you can see that. Yeah, actually. Because the guy who is living off his farm, there's no need to save. Now, when I'm hit with a crisis, where I cannot take my maize to bail me out, then I'm in trouble. That's why we cannot. And that's why when we're in a financial crisis, our fallback position is to find more jobs. Finding something more to do. Now, if you have a situation like COVID, where you're limited even what you can do and where you can move, that even worsens the situation. We did an analysis based on FinScope, based on people's savings and financial livelihoods. How long could they take the hit of COVID? The surprising thing is that across the spectrum, 1 out of every 2 Ugandans could not sustain their lifestyle before COVID for even 1 extra day. In other words, to put it simply, if you are living on 3 meals with COVID, you would not sustain 3 meals for even an extra day. Now, if you extended that to 15 days, it would become even worse. The number would even reduce further. Only 2 out of 10 would actually be able to live on those 3 meals per day. Now, for some people, 3 meals was even living in luxury. For some people, even that lifestyle before COVID was 2 meals a day. For some, that was 1 meal a day. So you can imagine. Because our lives are subsistence. We don't keep money. We live on what we produce, and that's it. That is the progress that we've had over the last 7 or 8 years. Most Ugandans are included, if you look at both formal and informal financial services. and there's not much significant difference between women and men. That number reduces substantially when it comes to formal financial services. And even the gap between men and women increases. Because women are more comfortable in formal financial services than men. So you find that, and you can clearly see mobile money is the biggest driver of financial inclusion, and it can be deceptive, because mobile money is not really a financial service. In the broad definition, yes, because payment is a financial services, because banks exist to facilitate financial payments. But in the broad scheme of things, in terms of savings, credit, mobile money is not yet there. And you see, there's a big difference, even in terms of gender. There's more gender disparity when it comes to banks. Mobile money managed to reduce that. Now, when you go for all these, the uptake is still really very, 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 very low. And you can see that for the women, especially the groups, are doing wonders for women. But all that is subsistence. Even the money that we keep in our savings group, it's not that we want to grow it. It's because we can fall back to it in a rainy day. People save, most Ugandans save before they consume. They don't save after they have consumed. And there's a difference. Most of the money financial services are looking for is money that you have saved after you've consumed. And we call it disposable income, economists. Yeah? But someone who saves before they consume, they have nothing left. I get 100K, I begin distributing it. This one, I'm going to keep it for school fees. This one, I'm going to keep it for the other guy who did, the other guy who did this, the other guy who did this. Before you know it, I have nothing to save. And when you come for me and say, but this money, no, this is already committed. In fact, it's better to call it committed funds. It's not like me who, after a whole day, after 5 days or whatever it is, I still have an extra 2 million or 3 million. I've catered for all my expenses, everything, and it's lying idle on my account. I can afford to give it to an insurance company because even if I lose it, there's nothing much. So, but for most Ugandans, they don't have that luxury. Because of time, I'll just... Yes. Now, most people, the most valuable financial institutions in Uganda are savings groups and mobile money, not even banks. The reason why that statistic in banks is gray is because the numbers were really very small. So it's not really statistically significant. It's just to show. At least there were 60 people in a whole sample of 3,000 who considered banks valuable. But you can clearly see that people don't look at money as an asset. They look at money as a tool to meet their needs. And there's a whole lot of difference between the two. If I'm looking at money as a tool to meet my needs come first before I think about growing my money. A person whom you talk to, a person who will appreciate the message that your money is a person who appreciates that money is an asset. That it can grow, it can multiply, and it can produce. People that we consider assets are our children. That's why I can afford to invest a lot of money in education, even when I don't clearly see the returns today. I will do anything to take my child to school
for a return that will materialize 20, 40 years later. But I cannot do the same for my money. Because my money is just a tool. It's not an asset. So if people are going to appreciate the message of your money can, they need to begin to look at money as an asset. And you only begin to look at money as an asset when you start living commercially. You have a commercial mindset and not a subsistence mindset. Why do guys don't use financial institutions? Because they're very expensive. They charge too much. And they are inaccessible. But the coded language behind that, we don't know, we don't understand what you're selling. We don't appreciate what you're selling because we're speaking different things. Yeah. So I want to end there because of time. But the biggest takeaway is, until we help our people to begin thinking commercially, so that I can transform my 3 acres or 4 acres where I just grow maize, I harvest the maize, it goes bad, they tell us 30 or 40% of losses in agriculture is post-harvest loss. We have 50% of arable land in East Africa. We produce most of the food in East Africa. If there's any factory that is looking at food processing, the best place to be would be Uganda. All those are opportunities, but because our people are subsistence, and because they are subsistence, they don't need money. But until they start transforming those plots of land and all those different things into commercial entities, until you begin to look at your salary and your savings as asset, not as money that you're going to buy A, B, C, D to enjoy yourself. That loan, those shares, insurance, all those things will not make sense to you. So our challenge here is, how do we leverage financial services to get people, to get money into people's pockets? Because once money gets into people's pockets, their pockets are going to become so heavy that they cannot afford to sleep, have a good night's sleep without that money being in a bank. They cannot afford to have a night's sleep without that asset being insured. But so long as they don't have those worries, our message will be to deaf ears. Ladies and gentlemen, thank you for hearing me.
Thank you very much, Joseph. Another round of applause for Joseph. Joseph has asked very pertinent questions for the bankers in here. And we have to really answer them. And the good thing is that we are getting more team leaders of the financial institutions. So, dear MD, you're most welcome for Housing Finance Bank. Thank you very much for joining us, Mr. Mugabe. As you are coming in, Joseph was insinuating that we who don't have money cannot access your banks. So as we continue engaging with you this morning, you'll probably get us an answer later on. Okay, just to remind you, those who may have questions, we shall have a Q&A session towards the end. Kindly have those questions with us. Those online, kindly send them through. Our admin team will surely have them presented to the members. At this juncture, allow me now to invite our platinum sponsor, our dear ED, Bank of Africa, to come and move a few words and also comfort us that we can actually access the banks, even if we don't have the money that we are trying to put into our pockets. You're most welcome, sir.
Good morning, all of you. It's a very exciting moment because this discussion today has come at the right moment. There is no better time than this for Goretti and team to organize such a very wonderful financial wellness month. All protocols observed. It is indeed a very privileged moment to see all of us here, to spare time, because it is out of the ordinary these days to have such kind of gatherings where we all come and exchange ideas, because the issue of SOP compliance has become a necessity. It is important. COVID is real. COVID is killing people, and we need to send this message every moment that we get to our staff, to our customers, to our home, because it is something, it is a disease. It has actually now in some other areas of the world been transgraded from being a pandemic to a pandemia, meaning it is live and it is going to remain consistent. I felt that it is important to emphasize this moment and this particular issue. Well, in the confines of these unprecedented times, keeping healthy and financial wellness, because of the consequences that have changed the lives of the people, that have changed the lives of our customers, that have changed the lives of our families, it is important for us to resound, to educate, to share, to see how best can we bring information closer to them as far as financial wellness is concerned. And indeed, Financial Services Month is timely, and it is now financial sector led. We want to be at the front line, and we want to continue to do this. And that's why you see that there are financial sector captains in this house. That's why you see that there are educationists in this house. It is going to take a team for us to try and continue to develop the idea, to stimulate attitude, to change mindset, because mindset is very key. I was in one of the villages on Sunday, and I met a couple of people without SOPs, and they don't really. So I asked them, "Do you understand? What do you understand by coronavirus?" He said, "What?" Okay. What about Corona? He said, "Corona? You are talking about a Toyota Corona." So it's unbelievable, and these are people that I took a moment to try to see what can we do to educate such kind of people. It will take much more than we in the financial sector, but that gives you why we have the likes of FSDU, because for them they administer baseline surveys, baseline information, and that baseline information enables us to understand the barometers of what exactly and consequences of financial illiteracy in this economy. And it makes imperative that we in the financial sector have a great deal, a role to play as we work with the collaborators to move and change the mindset of our people. So as we look at how to sustain the teams, to sustain the individuals during this financial shock. The coronavirus pandemic, that is now a pandemic, has really costed several lives. It has costed people jobs. It has costed individuals loss of business, loss of contract. And loss of business, loss of contract, it means the members, the individuals are not in position to provide what they were providing to their society, to their families. Many of us, we are in an African setting. We have got extended family. That is what makes us Africans, because we have other people outside our nucleus families that we have to look after. But many of those are actually in businesses, small, micro, medium, self-made individual entrepreneurs, as it has been stated this morning, who need our help. They need our advice. And that's where we, the financial institutions, come in to facilitate this exercise. It is needless to say that for us at Bank of Africa, and of course, as part of my other colleagues here in the regulated financial institutions, we have already and we will continue instituting measures that are directed towards financial inclusion, that are directed towards creating financial wellness, notwithstanding the challenges of this pandemic. And the best way that has evolved is that when this came about, I saw the kind of togetherness, uniqueness in the way we are collaborating. We in the financial sector are no longer competing. We have to collaborate. My brother Mugabe here, if we keep exchanging calls almost all day in some instances. My sister there, we are even neighbors. So we look at things outside normal business to see how can we sustain, how can we enable individuals gain access to financial information, how can they be better. Now, in terms of providing this financial advisory, which we are making as part of the systems, part of our processes. And that's why you see, if somebody needs to access a facility, needs to access a loan, we try as much as possible to keep it very close and advise them. And finally, I would like to share with you our experience. And our experience is making sure that during this period, we get the clients. We needed to understand their cash flows. We need to understand the cash flows before COVID and the cash flows after COVID. It is the basis through which we sit with them and advise them. For instance, do we need to restructure? For how long do you need the restructure? Can you afford it? It is pointless for you to sit with a customer and you say, my friend, I need my money. I gave you the money and you need to bring it back. Because there are several psychological issues that are attached to this kind of situation that we are facing as individuals, as companies, as a team, as an industry. And we can only fight this, manage the situation as a team. As I conclude, I still want to resound this kind of situation, that we are losing significant gains, we are making significant inroads into the journey of financial inclusion, impacting to create good direction and magnanimity in this direction. It will necessitate to have the likes of national financial inclusion strategies That is where we will have the input of financial sector deepening and development strategy to see that as an industry, we put together a formidable force to provide advice, to sit with clients, to make them aware of what they can do, what is possible and what is not possible, and how can they sustain themselves during this period. It is important for banks to listen. It is important for our clients to listen. It is important for all individuals to be part of this journey. And the only way we can achieve it, because the ultimate impact is the individual incomes and lives of our people. With those a few comments, I would like to say that in the coming month, we at Bank of Africa will remain very, very available to provide a very good platform, a platform with our colleagues within the industry, so that we continue to provide an enabling environment of financial advice. Thank you very much. Thank you for listening to me, and enjoy the rest of the deliberations. Thank you very much, Goretti and the team.
Okay, ladies and gentlemen, allow me to keep our ED here, and I will request our board chair to join us with the CEO, Ms. Goretti, to come and launch the Financial Awareness Month. The rest of us, we just have to keep our eyes glued to the screen.
So friends, this is the first part of the ceremony. When we went out to the industry, we went out with needs. We went out with ideas. We went out with concepts. We went out with nothing, actually. We just took an idea. And these very good people in the room made it happen. And Bank of Africa decided to take the platinum slot. We want to thank you for that, and we want to thank you for the fact that you said you're continuing to be with us. So we are launching at this point the month which you've indicated you're committed to supporting as an industry. It's going to be an annual event, and we are going to launch it in the form of signing off the official logo. And so allow me to do this and request you to sign it off with our best one. Thank you very much. You may please have your seats. All right, now that we've got the month launched and known, it's time to get to the campaign and to also understand what really motivated the thought. And I'll take the honor to take you through the campaign before we can officially launch it. The slides, please. So, when Joseph was speaking, I hope that we picked a lot of insights from there. And when Bernard was speaking, I think what's very clear, everything was in the 50s, regardless. Everything was in the 50s. Haves. Those who have are not ready, are not able to survive beyond a day. Those who don't have are not able to survive beyond a day. Those who have don't have emergency accounts. Those who don't have them. Now, we have land, he said. We are not using it. So, what is the problem? Is the problem mindset? Maybe the problem is the blessing of plenty, the blessing of good land. And so we thought, as we are going through this, more and more, it's important to continue with the conversation. And would like to thank the Bank of Uganda very much, the Ministry of Finance, that are really the foundation of this whole campaign, as you come to see. Born out of a financial literacy curriculum that was developed in around 2017, when the strategy was coming up at the same time. So we'd like to really thank them for that. A very short brief about the month and the campaign. Really, the goals are simple: to improve financial literacy. Apparently, financial literacy is just having the capability of making sound decisions about your finances for your betterment, for our betterment. So as simple as that. Making sound decisions for our betterment. And we would like to see that because of that, people are able to uptake or take up financial products and services much better and change behavior too. And of course, to bring together providers and users of these services. And for that, we want to thank you that you're in this room. Now, the objectives are deeper than the goals. We want to sensitize us about the importance of financial literacy. You see, financial literacy and all behaviors in there is a behavior change campaign. I mean, we've said people have, but they don't have. They don't have, and they don't have. So it takes quite a bit to change those elements. And so we're hoping that we can get people to change their behaviors. We want to also deal with the key elements of personal financial management. We want to excite the public in one way or another to deliberately save for emergencies. Now, I know that I was a banker for 6 good years and in charge of products. And we went out there and would churn out those products and say, okay, we would like to have a target savings account. But why? We would like to have an emergency account. But how? So those things, I think a number of those things have come very clear in this period that we want to get people to deliberately save for things like that, to educate the community about non-conventional service providers and services, to link the public to the service providers, to create dialogue and community involvement, and to foster partnership and coordination within the banking and financial services industry. We thank you. We have insurance in here. We have retirement benefits in here. And we need to have more. We want to see money markets in here as well. And then we want to promote career opportunities and professionalism in the banking and financial services industry. I think it's Joseph who mentioned that there's competition. It's a good thing collaboration is coming, is winning over competition. But the financial services industry grows only marginally. The trends are not as big as they should be. We are persuaded that one of the reasons it is that way is because the bankers, the people working in the financial services industry, are not yet professionalized enough to go out and be referred to as doctors of finance. I keep referring to family events. Whenever there is a family event and anybody feels bad, any possibility of any illness, they will look for the doctor in the room. In fact, the doctor will look at each of you and say, "Come, I see something with you. Are you okay? Why are your eyes like that?" But when we have bankers at family gatherings, tell me how many people run to the banker. Or tell me how many bankers say, "Come, come, come, come. Oh, guys, I want to give you a talk on this. Or I want to tell you that we do not have to only save here, we can save here." How many bankers do that at family gatherings? And I also talk of, and I keep saying it, I know that when I was, again, in banking, if you needed information and said, I want to talk of this core information, even beyond, and I speak to our branch manager and say, hey, could you give me this information on everything? What is that? Please ask so-and-so. Please ask so-and-so. So we need that whole of professionalizing end to end so that we can open up opportunities in the banking sector. First, for employment, but also for inclusion. The more we become professional, the more we widen the opportunities for inclusion. We've talked about this. We want to say that COVID accelerated this idea, totally accelerated it. And because we were given the mandate and responsibility to promote inclusion, every time we had things to do that, we want 20% of our retirement benefits to support this. And I can't say that a number of us entertained the idea for a sound reason. But then we realized that there are issues there. And so many other challenges that everybody found. That is what really motivated this campaign. Now, the campaign is talking about many things, and we wish it was talking about less. In fact, as a communicator, I know that the lesser the messages, the better. And when we were talking about this with my husband, who is also a communicator, he told me, "You must be joking." And then I said, "You know what, unfortunately, it is like telling people, when you're talking about nutrition, you never tell people, can we please eat starch? You don't. You actually tell people, you have to have a balanced diet. They have to eat vegetables, they have to eat vegetables and fruits for minerals and vitamins. They have to eat starch for energy. They have to eat protein for growth." And I just realized that this is it. It's very, very similar to financial wellness. That you cannot just save, but you need to insure. You need to plan for retirement. So I said to him, if we decide this year of COVID to talk about savings, next year we shall need savings. And the other year we shall need. So when shall people understand the entire scope? And I said, these things are very related. You see, like savings is like vegetables, and vegetables are to the body. So is savings to our wellness. Now vegetables are hard to eat. you really don't want to eat them. But they give you vitality and resilience. Unfortunately, savings is the same. So we are going to have to eat this vegetable. So I'm saying, okay. And then there are so many other things that you can like and eat too. And that is how we said there is not going to be any way. We have to find a way of talking about the different pillars together. So then we came to the creative. Of course, we had to get some creative minds to give us something. And that is how this came up. Your Money Can. Sente Yesobola. In fact, we had started Be Money Smart. We started off with Be Money Smart. And that campaign, incidentally, has been done around the world in some ways. And then the idea came, Be Money Smart with what? I mean, I don't have anything. You just mentioned it. What am I being smart with? And then the idea of Your Money Can came up. I want to appreciate Joseph for saying that people don't have money, so what can they save? The truth is, the Your Money Can, we felt positions financial literacy. Because when you say Your Money Can, tell me how. Position financial literacy and proper handling of money as the catalyst for dreams, ambitions, and possibilities. It also underscores potential and a sense of being unlimited. Meaning, even if I have 100 shillings, my money can. So how can I use the little I have? Or if I don't have at all, my money can. How? I don't have money. So how can you tell me my money can? These are the kind of conversations we'd like people to have. The idea demonstrates that handled right, money can lock aspirations. And the Be Money Smart is just to position best money practices as a smart choice. So if my money can, let me be what? Money smart. It's behavior change call that provokes both mind and conversation. So for personal financial management as a pillar, and there are going to be many. One of them we haven't put here. But I learned, and Joseph, I'm persuaded, that the reason people have 4 acres of land and they do nothing with it, it's because the primary thing is to eat, to be well, to survive, to educate. So for as long as the goals are around eating and educating, that's it. So in personal financial management, we now begin to hear about SMART goals. Who knew? There are people in the room who know and who are better than us because they knew you have to set some SMART goals. So this is what we are talking about. But in this particular execution we take, your money can enable you to live a better life if you budget and save before you spend. And it's not if, it's when. So you're going to see a lot of this saying when. In savings, your money can help you achieve your dreams if you say, when you save every time you earn money. So even if it's 1,000 shillings, you should be able to save before you eat it. And it's possible. Somebody was telling me, but you always have a lot of conversations when you're doing this. They say, now, the people with 1,000 shillings, they can't even listen to you. Your money can't save before you. And I said, okay, do you know that in some places a chapati is 500 shillings? So when somebody has 1,000 shillings, it is possible to eat 2 chapatis a day, and it's over. But it's also possible to buy 2 chapatis, eat 1, go to work, sell 1 for 1,000, and live on that 1,000 the entire time. So we are saying your 1,000 can, if you save every time you earn. Loan management. Your money can help you grow if you use that loan for intended purposes. If I ask people to put up their hands, how many got a loan, a full loan for one purpose, and ended up using a portion of it? There are many. So we are saying that it's possible to have 2 people get 10 million shillings for the same purpose. One uses 5, and another to do something else, and the bank sells whatever they have. Another gets 10, uses it for the entire bit, and becomes the next wealthy person next year. So your money can. Your money can help you grow if you plan and invest wisely. There are some people who prefer to do real estate. Others prefer to do other things. So your money can if you choose differently. Insurance. It is possible to be earning 10 million shillings a year. A month. And another is earning 1 million shillings a month. And tomorrow, the 10 million shillings a month person gets the wretched disease, as we know. And everything is wiped out. And the 1 million shilling person, I'm sure Ruth is very happy by the statement I'm about to make. The 1 million shilling person insures with a little. And tomorrow, they are wealthier than you. Planning for old age, your money can help you retire comfortably if you start saving and planning now. And so many others. So really, this is it. And we say that since we are not going to be able to say so many messages at the same time, we will have a planning and savings week, a managing loans and investment week, a retirement insurance week, and a digital financial literacy. And at this point, I would like to thank our strategic partner, FSDU, that has decided that they would like to run that week. Would like to thank them very much. Please clap for them. Digital financial literacy, and we'll host a digital financial literacy summit during that month. And then a careers in banking and finance month, and at which point we'll also launch the UIBFS new membership structure, which is supposed to be supporting and promoting professionalism. Now, during this, we are going to have radio talk shows, we are going to have radio ads. If we can afford, we shall have a TVC, but we are still looking at the industry to support. We shall have webinars. Now that there is the air, there is virtual. Even today, you can tell me, I want to do a webinar on this, and we do it. Why not? So we have a schedule, but we are still looking for resource persons. So if you think there is something that you're passionate about, we would like to have it. Now, we've realized that the messages are too many. And because the messages are too many, we have come up with a portal. www.yourmoneycan.or.ug. So if you go on it now, could you click on Your Money? Your Money over there. So you have find those personal financial management as the pillars are. And this information is derived from the curriculum. You can go and interact with it. And I want to tell you it's going to be improving every day. Because some of it might seem like Greek to some. So we want to try and be improving it. So if you engage with it, please suggest. And we are talking to the bankers. Look at it, engage the marketers. Call, tell us, no, this has to change so that it gets better. We don't want anybody to say, we know behavior change starts with awareness. So we want people to have a central place where they can interact with this information. If you go down, what people are saying, today I would like that some pictures are taken of you, having come out of here, say something. We would like to put it here so that you can encourage others. And those will continue throughout the month. We also want you to submit a review, submit a testimony. The banks have good testimonies that we can share. We want video testimonies, we want word testimonies, and we shall award a testimony a week. We shall have a winning testimony award every week. Our speakers, now we have 2 speakers on there, but they'll be there. There are going to be more. So we'd like you to keep looking at the portal. And of course, we have our sponsors for the month. So we'd like this to be full. We want many more logos on there. And these are linked up to, could you please go to financial service providers? Very quickly. Financial institutions, banking institutions. So we have all of them there. So now you can quickly go to your bank. You go to one place and find it. The links are active. And in this case, we did not just consider sponsors because we thought it's important. Can you go to professional careers? Banking? And this will improve. We've also told you from entry level to wherever what those careers are like and what kind of training is available if you'd like to professionalize. So basically, this is it. The portal will keep improving as we've indicated. We want you to engage. We want you to speak. We want you to give testimonies. We want you to give reviews. We want you to improve the portal. We want you to use it. Now, we think that the opportunities are great for the industry. If you have a customer who is disturbed, refer them to the portal. These posters, Your Money Can, these are for you. Where is one? Can I see the pull-up? Please bring the pull-up. They are for you. So you can also do it, put your logo alongside it, put it in the banking halls. Get a poster, put it there. Send an email to all your customers telling them Your Money Can. So with those few, they're not very few. They are not very few, but I guess I am trying to let you know that this is for all of us. Let's print T-shirts. The bankers are in here. Please print T-shirts. Let's do everything we can. Let's create an emergency account, guys. Let's do that. I know that it's there, but let's talk about it differently. People should save 6 months of their... Do they even know how much they spend a month? So let's work together on this. Thank you very much. And at this point, I would like to request to invite our guest of honor, the board chair, Louis, to give his remarks and launch this campaign.
Good morning. To my colleagues, board members of the Uganda Institute of Banking and Financial Services, captains of the industry, the CEO, Uganda Bankers Association, members of the media, ladies and gentlemen. I stand here as the chairman of the board of the Uganda Institute of Banking and Financial Services. We, as the board, we are presented with this idea by the chief executive of the institute. We approved it, and we thank you as management for planning this awareness month. And today, here we are at the launch. Let me first of all speak to the strategy of the institute. We have a strategy, a 5-year strategy running from 2018. It has 4 pillars, and some of these pillars have been touched on by our chief executive. The strengthening organizational effectiveness and visibility. And I think she's done a very good job on especially the visibility of the institute. Enhancing stakeholder engagement and collaboration. Improving relevance of the financial services industry and advancing ethics and professionalism in the financial sector. Today, I don't want to touch on professionalism. I don't want to touch on visibility. The stakeholder engagement is continuous. I want us to focus more on improving relevance of the financial services industry. And when we talk financial services, we are not only referring to banks. Most people know banks, and we forget the others. It is something that stretches to the micro deposit-taking institutions, the credit institutions, insurance, the retirement benefits, capital markets, and even the development banks. I think in the presentation this morning, I will start with the things that we should celebrate as bankers. In the presentation, you could see financial services, the ratio of financial services in this economy, whether you take it as a ratio of GDP, it is increasing. Outreach is increasing. We've set up branches. We have now agency banking. You call it Banka Duka or Duka Bank, one of the two. But we have several points of engaging our customers. But banks are not in the business of just being depositories. I think that's where we are challenged. We're not just depositories. People come, deposit their money, and walk away. Bankers and all the other players, we intermediate those resources. For us to be relevant to our clients, we must intermediate those resources. We must support economic activities. And I think that's where we are challenged as an industry. We were told this morning that mobile banking is quite popular. We now have almost 30.4 million registered clients, okay? 19 million of those are very active. Number of transactions runs in 312 million in a month. And in a month, you are talking about 8.5 trillion shillings. But if it is just payments, it is not supporting economic activities. And I think that was the main message by Mr. Lutwama. Where's Mr. Lutwama? I think that was your message. It cannot just be payments. We must recognize the challenges. We must, as an industry, recognize the challenges. That most of our people, for example, are employed in SMEs. You go back and ask SMEs, do you borrow from the banking industry? And you find, I think, the last number I saw, only 6% of SMEs actually borrow from banks. So what do they use as capital? The other 90-something% either use own savings or money from relatives to support the businesses. That's why they can't expand. That's why we cannot create more jobs in that segment of the economy. So we have our work cut out. We now know the challenges. It is being relevant to our current clients. That's number one. but also being relevant to those who are not yet our clients. We must reach out, not only to our current clients, but reach out to see that more people use financial services. Our role as an industry is to support economic activities. We should be relevant across all demographic divides. We must be relevant to the rich. We must be relevant to the poor. We must be relevant to the educated, to the non-educated. We must be relevant to the urban. We must be relevant to the rural. We must be relevant across the gender. It's not only being relevant to the men. I think what I got from the presentation by Lutwama is that this is a campaign that is very relevant, not only to the industry, but to the economy. We should go beyond communicating between ourselves to communicate to the wider public. And I think, Goretti, I think it is good you've started with Sente Sobola, that's the first translation, but we should do more to translate those numerous messages into different languages. This is a country that's known with facing challenges. We at one point had the HIV as a challenge, but we tackled it. Let us also tackle this one. Money is not just good and you look at it and you put it in your mattress or your pillow and every day you come back, look at it. No, you must use that money to make more. I want now to express on behalf of the board our very sincere thanks to all the captains in the industry for the sponsorship. Thanks a lot. Single out Bank of Africa for being a platinum supporter of this event. Maybe call on the others to match and do better. What is above platinum? Well, if you, it should become, yes, I think it's good Bank of Africa has challenged all. You need also to talk to Goretti after this to see where you come in. I think she said you can take up a whole week, you can take up an activity, communicate with your own clients and make them aware of this campaign. But more importantly, I also wish to thank FSDU for also being a strategic partner of the institute. And they will be hosting the digital financial literacy. Thanks a lot, FSD, and thanks a lot for your presentation. I think it brought out very many points and I think challenged the captains of the industry. This is Summit Consulting. We thank you also for is that the web portal? Thanks a lot, Summit Consulting, for working on our web portal. So, with those words, ladies and gentlemen, on behalf of the industry, on behalf of our board, I declare this campaign launched. Merci beaucoup.
Enable you to live a better life only when you budget and save before you spend. Act now. Learn how to manage your income and expenditure correctly at the Banking Financial Services Awareness Month.
Join our chief guest, and we also have that autograph on our board there, such that our money can start.
Your money can enable you to live a better life. Only when you budget and save before you spend. Act now. Learn how to manage your income and expenditure correctly at the Banking Financial Services Awareness Month. Meet the financial experts. Learn how to deal with financial hardships like those caused by COVID-19. Be money smart. Be part of the Banking and Financial Services Awareness Month. Visit www.yourmoneycan.or.ug. Brought to you by the Uganda Institute of Banking and Financial Services, UIBFS.
very much for gracing this morning. Our dialogue can continue with the respective individuals who may remain behind and can also continue online. I want to thank you for being with us. Please make sure your money can. Let us start engaging ourselves, because money is money and money must stay with us. Thank you very much for listening. Thank you for coming. And may you please have a safe day and manage your money better. Thank you very much.